Question number 2.
Kia ora,
Joanne
Mr.
Hayes.
Speaker. My question is to the Minister of Finance. What recent reports has he received about the latest trends in savings levels by New Zealanders?
Honourable Bill English.
Mr Speaker, I've seen Statistics New Zealand report on the 30th of January. It shows New Zealand households had a positive savings for 5 consecutive years to March 2014. This has not happened since the early 1990s. The figures show that before 2010, household savings had been negative in all but 1 year since 1995. Household savings have totalled $11.6 billion over the last 5 years, a major turnaround on the $15.5 billion of borrowing, or what economists call dis-saving, over the 5 years previously. This is the result of resilience of our households and government policy that is encouraging savings and a rebalancing of the economy.
Supplementary, Mr. Speaker.
Supplementary question, Joanne Hayes.
Over the past 6 years, to the Minister, over the past 6 years, what steps has the government taken as part of its economic plan to encourage households to save more and to reduce borrowing and consumption?
Honourable
Mr.
Bill
Speaker,
English.
one step was to encourage the Leader of the Opposition to pay his bills to a household in Wellington.
Order. If the member would just address the question that's been asked without referring. Order.
Mr. Speaker, the government has taken a number of other steps as well to rebalance the economy. One of those measures was a comprehensive tax package in 2010. This included across-the-board reductions in tax on savings and work, alongside an increase in tax on consumption and property investment. We've also continued to provide subsidies to the KiwiSaver scheme, implemented by the previous Labor government, which give New Zealanders additional avenues to save and invest, and in particular the government share offer program gave New Zealanders opportunity through KiwiSaver and directly to invest in what they believe are sound long-term investments.
Supplementary, Mr. Speaker.
Supplementary question, Joanne Hayes.
To the Minister, what role do fiscal savings as part of the government's wider program of economic reform have in rebalancing the economy?
Honourable Bill English.
Well, Mr. Speaker, fiscal restraint removes pressure from the economy for higher interest rates and higher inflation and helps keep the cost of living increases low. The government operating deficit has shrunk significantly from 9% of GDP in 2010, half of which went into supporting the people of Christchurch after the earthquakes. This has helped contribute to overall national savings, which stats calculate around $14.2 billion. Along with the government's program of microeconomic reform through the business growth agenda, this is creating conditions where businesses are investing, and current signs for increases in real business investment are encouraging.
Mr. Speaker.
Supplementary question, Joanne Hayes.
What are the economic benefits of a strong national savings rate?
Honourable Bill English.
Well, Mr. Speaker, New Zealand has a track record of relatively low national savings, and we're not quite sure why that is even now. But higher savings tend to help keep inflation and interest rates lower. For instance, better savings will be contributing at least to mortgage rates that are still just above 50-year lows. Higher savings enables domestically sourced investment, and that's helping drive New Zealand's solid economic growth. For instance, there were 80,000 more jobs last year, paying wages that on average are growing faster than the cost of living.
Supplementary question, Dr Russell Norman.
Thank you, Mr. Speaker. Has the Minister seen reports that the savings of New Zealanders held in trust by the Super Fund are at risk from the fund's investments in fossil fuels? Reports such as the recent speech by the head of the OECD, which referred to fossil fuel reserves as stranded assets.
Honourable Bill English.
No, Mr. Speaker, I haven't seen those reports, but the New Zealand Super Fund has ethical investment guidelines, and according to all the monitoring of their decisions, they comply with those guidelines.
Supplementary question, Dr Russell Norman.
Thank you, Mr Speaker. Has he seen reports from the International Energy Agency, the World Bank, the OECD and the United Nations warning that at least 2/3 of discovered fossil fuels will have to stay in the ground to avoid catastrophic climate change, wiping much of the current value off the fossil fuel sector? And will he hence discuss possible divestment options with the New Zealand Super Fund as a result?
Honourable Bill English.
Mr Speaker, I haven't seen those reports, but it's possible that the Intelligence Select Committee will scrutinise those at its first meeting with its new membership. Mr Speaker, we don't share the same anxiety as the Greens about the use of fossil fuels, but we would expect the Super Fund to take into account the risks to future profits for the companies in which they invest.
Supplementary question, Dr Russell Norman.
Thank you, Mr Speaker. Did he see the recent warning from the Governor of the Bank of England, who said that the vast majority of fossil fuel reserves are unburnable if global temperature rises are to be limited to below 2 degrees Celsius, and hence will he heed his call for investors such as the Super Fund to begin divesting from the riskiest coal companies, as the Norwegian Fund has done recently?
Honourable Bill English.
Well, it's ironic that Norway might be disinvesting when the main source of its sovereign wealth fund is, of course, endless oil out of the North Sea. So that position seems somewhat contradictory. We would expect, again, the Super Fund to take account of the real risks. And they can do a certain amount of speculation about the impact of climate change. No doubt that's built into some kind of probabilities that they calculate about the risks for the investments that they have. But the government doesn't intend to direct them in any way around fossil fuels.
Supplementary question, Dr Russell Norman.
Thank you, Mr Speaker. Does he believe that it's ethical for the Super Fund to be investing over $676 million in fossil fuel companies, effectively taking a bet that the world will take no action to avoid catastrophic climate change?
Honourable Bill English.
Mr Speaker, yes I do, just in the same way as it's ethical for that member to pull up at a petrol pump and fill his car up to keep it going for the week. I mean, fossil fuels are just part of our way of life. The Greens don't like them but continue to use them. The Super Fund should take into account any future risks it sees. I have to say the risks of fluctuation in prices of fossil fuels seem to be much greater and more immediate than the long-term impacts of climate change, with 50% and 60% reductions in the prices recently. We'd certainly expect the Super Fund to be taking account of that in its investment decisions.
Question number 3. The Right Honourable Winston Peters.
Mr Speaker, this question is to the Associate Minister of Transport and asks, when will the targeted review of the operating mechanisms of the Super Gold Card free off-peak public transport scheme be completed?
Mr Speaker. Honourable Craig Voss. Mr